Greetings, Master Your Finances, a comprehensive guide to personal financial management. People react differently, isn't it, when they hear this word, personal financial management. It's about money and managing them effectively. I'm showing you some interesting reactions. You have to check the odd picture, which is the odd picture. People who are effectively able to manage personal finance tend to be happier and joyful, stress free in life. We are going to discover the importance and significance of personal finance through this book converted into a video for you. And we will be covering interesting topics like budgeting, banking, insurance, mortgages, investments, retirement tax, estate planning, and many more topics, which will help you understand personal finance management better. So, the topics which are going to be covered in this video are how to build a strong financial foundation, navigating the world of banking, understanding the complexities and the advantages of effective banking, how to safeguard your future with insurance. We will be unlocking the secrets of mortgages, how to master the art of investments, how to craft a retirement plan, demystifying taxes, securing your legacy through estate planning, financial IQ, how to increase that. Today, technology is a very fundamental part of personal finance management and how to embrace that effectively. Debt, overcoming debt, and strategies for a debt free life. Market volatility, navigating market volatility, and how to invest in uncertain times. Understanding the art of negotiation for financial gain. Unveiling the secrets of credit scores and reports. How to achieve financial independence. Growing wealth. How to grow through passive income streams. Exploring sustainable and ethical investing, which is the latest trend in the world of finance. Climate change and personal finances, going green, saving green. The rise of cryptocurrencies, how to navigate the digital economy. embracing financial freedom, and that is building your path to prosperity. Let us look at some of the effective strategies for personal finance through building a strong financial foundation. Personal finance plays a critical role in everyone's life. It determines our ability to achieve our goals, fulfill our dreams, and ultimately lead a comfortable life. Let us look at a case study, Sarah's journey to financial freedom. Sarah, a recent college graduate, found herself burdened with student loan debt and unsure how to manage her finances. She implemented a budgeting system, allocating her income into categories such as savings, debt repayment, and living expenses. She educated herself on various investment options, including stocks and real estate, to maximize her wealth over time. By following a very disciplined approach and setting realistic financial goals, Sarah successfully paid off her student loans while building a robust savings portfolio. David's road to retirement. David, in his early 40s, realized the importance of planning for retirement after witnessing a close friend struggle during their golden years. He started by establishing an emergency fund, enabling him to cover unforeseen expenses without compromising his long-term financial goals. So David diversified his investments, striking a balance between low risk options like bonds and higher yield options like mutual funds and stocks. By diligently contributing to his retirement fund and adjusting his investment strategy as needed, David set himself for a secure and comfortable retirement. So some unique tips to build a strong financial foundation. That is the starting point of effective personal finance management. So what is the first thing you need to do is you have to track your expenses and also have a realistic budget. Very important. And you need to have goals, specific financial goals, which have to be smart, that is specific, measurable, achievable, realistic, time bound. And debt repayment is important. And high interest debts should be given a lot of focus for repayment, isn't it? Build an emergency fund to handle unexpected expenses. So certain expenses will come, which will be urgent, important, and you may not be expecting that, isn't it? So we need to have a emergency fund to handle such expenses. Education and training is an ongoing process. So you have to keep on educating yourself. What are the investment options available? And also have a diverse portfolio. Don't put all your eggs in one basket. Automate saving contributions to ensure consistency. So technology can be used. Avoid unnecessary spending by distinguishing between needs and wants. Needs are important. Wants are important. As they say, you have to focus on your needs, look for comforts, isn't it? And then go for luxuries. So needs takes priority. So negotiating skills are very important. Negotiate better terms on loans and credit cards to reduce interest rates. Maximize employer-sponsored retirement plans utilizing matching contributions. It's a good one for long-time savings. And also, you need to have and consider alternative income streams such as freelancing or side businesses. So, multiple sources of revenue or income is always good. Review insurance policies, and you should also ensure that there is adequate coverage. It covers all your risk factors. Stay informed. Tax, very important. So you should be updated, always keeping yourself informed about tax saving strategies and opportunities. And review is an important part. Regularly review and update your will and estate planning documents. Take advantage of employee-provided benefits such as flexible spending accounts or stock options. Networking is very important, and networking with professionals in the financial industry for advice and guidance, very, very important. You can also seek advice from certified financial planners or advisors to create a comprehensive financial plan. Have a good plan, have a comprehensive financial plan. And also important is your mental and physical health, isn't it? So don't neglect on that, and that can also impact your financial well-being. Use online tools and apps to track how you're spending, how's the progress happening on the savings front. And if it is there and the expenses are a bit on the higher side on your housing, so you can also consider downsizing. You can also avoid impulse purchases by practicing delayed gratification. Stay disciplined during market fluctuations and do not go for panic sellings. And you can also take care of, or rather advantage of, tax saving investments. Regularly review, optimize your investment portfolio, and also educate yourself on personal finance topics through books, podcasts, or online courses, including these kinds of videos which you're watching right now. Celebrate milestones and achievements along your financial journey to stay motivated. Very, very important. You need to celebrate. So by implementing these tips, anyone can take control of their finances and set themselves on a path towards security, wealth, and fulfillment. World of banking, how to navigate that. So we already know personal finance is very important aspect of our lives. And in that process, the world of banking, understanding that is also equally important. So John, let's have a case study. John, a recent college graduate, struggled to choose the right bank. So how do you choose the right bank? Should you look at the brand? Should you look at the services? How do you select the right bank for you? Because for everyone, there is an appropriate and a right bank, isn't it? So you have to do some research. You can also take guidance from financial advisors. So there are fees involved, interest rates, customer service. So many factors goes into when deciding on the right bank, isn't it? And he went for reviews and also recommendations from others. And also, if possible, visited some local branches for taking the right decision. So there is Emma, and she had a student loan debt, and she also utilized online banking. Today, online banking is a very comfortable feature, isn't it? Many banks offer that. By consolidating her loans, automating payments, and setting up alerts for due dates, she gained control over her debt repayment journey. So she utilized online banking tools to track expenses, spending patterns, and also having realistic savings goals. So some tips for you. First thing is you have to understand there are different types of bank accounts, savings accounts, current accounts, so many things, isn't it? And money market accounts. So research banks in your area, find out the best in terms of services and fees. And also you should also pay close attention to hidden fees, transaction charges, minimum balance, otherwise they put a penalty, isn't it? So credit unions are also an alternative to traditional banks. And, they offer lower fees and very competitive interest rates. So also take advantage, so many things have changed today. We have got mobile banking apps and, on the go, you can access your mobile through that, your banking facilities. You can pay, you can make deposits. You can also take advantage of those features. So you should review your account statements and check out any unauthorized charges or errors is happening out there. And you should also familiarize yourself with the benefits and risks associated with credit cards and use them responsibly. Very, very important. Many people, spend without thinking too much on their credit cards. And at the end of the day, they have huge liability, huge money to pay back. And also, you should ensure you're having a good credit history, that is paying bills on time and maintaining low credit utilization rate. It's very important that you have got good credit history. You can also consider separate savings accounts for emergencies and specific financial goals. And also you can explore different investment opportunities offered by banks. Best thing is when you don't know or you want to know more, you can always seek advice from financial advisors. And you can also develop a personalized savings and investment plan. You can plan your own, how much you can invest, how much you can spend. It's better to have a personalized savings and investment plans based on your income and expenses. So again, today you have to protect your personal information, isn't it? A lot of scamsters are there, a lot of phishing is happening, malwares are there. And so you have to protect your personal information, ensure your passwords are secure, go for two-factor authentication wherever possible, and also look out for suspicious activities in your account. Prioritize automating bill payments to avoid late fees. So if you miss on a payment, there is a late fee which adds again to your cost, isn't it? So automating is a good idea. And you can also by forgetting and not paying, it also affects your credit score, isn't it? Delayed payments affects your credit score. So understand the process and potential consequences of overdrafting your accounts. Very important. Always keep a record, maintain a record of important financial documents. So tax returns are there, loan agreements. So you might have some copies. Keep them safe, okay, for future references. Educate yourself on the advantages and disadvantages of online and brick and mortar banks. Many features are there. They are strengths as well as weaknesses of both, isn't it? Of both online banking and physical banks. That is brick and mortar banks, isn't it? Establish a strong relationship with your bank. So by utilizing financial planning, advisory, whatever features which are available, you can make the best use of that. Look for banks that provide rewards and cashback programs for using their services. So you can also consider joining a credit union or community organization that offers financial workshops or seminars. Very important, to say not the least, you should always stay informed about changes in banking regulations, which may impact interest rates, fees, or account terms. Keep updating your knowledge. Compare interest rates on loans and credit cards before making an application to ensure you get the best deal. So before you apply, check out the interest rates on loans and credit cards if they are offering, isn't it? Regularly monitor your credit score to identify areas for improvement and against identity theft. Setting financial goals, having a budget will help you gain control. See, the entire purpose of this video is to enable you to be proactive, not reactive, isn't it? So how do you control your finances? So by setting financial goals, having a budget, managing your spending habits, and also have your objective goals, isn't it? So you have to also understand there is this Federal Reserve and what role it plays and what are the effects on the banking system. And also you should be aware of alternative financial institutions such as online banks, peer-to-peer lending platforms, and they may also offer unique benefits and opportunities. Insurance, safeguarding your future. Insurance is a very crucial aspect of personal finance. Let us look at a case study. Sarah is a young professional. She did not have health insurance and faced a significant medical emergency. Obviously, the bills were quite high and she struggled financially. So, need to have good health insurance. and it impacts your financial security. Home insurance. Now, John is a homeowner and there was an earthquake and his property got damaged. Fortunately, he had a home insurance. So, insurance can protect your assets also and also gives you peace of mind. So, some tips for you: evaluate your insurance needs, and it has to be based on lifestyle, age, and dependence, isn't it? Evaluate, plan, and also do a lot of research and understand the different types of insurance available. See, there are many different types of insurance available. There are health insurance, life insurance, home insurance, and many more, isn't it? So you have to understand what are the different types and features and facilities available. So you have to shop around, look for policies, find the best coverage, look at the competitive rates. But here, one thing is we should look for a trusted insurance provider. Look for their track record. Isn't it very important how they have performed over the years? You should regularly review and update your insurance coverage to ensure it aligns with your current needs. So you would have taken insurance some time back and now your needs have grown up, gone up. So you need to update also, isn't it? And also consider bundling multiple policies. So it will help you save money. And a healthy lifestyle is important so that you qualify for lower premiums on health and life insurance. And also understand the terms and conditions of your policies so that you are not subjected to surprises during claims. You have a claim, then you find that is not covered, then that becomes very problematic, isn't it? Save an emergency fund. Very good. So if you have an emergency fund, you can cover deductibles and unexpected expenses not covered by insurance. So certain things will be covered. Certain things will not be covered. So you have to plan for that. So you need to have an emergency fund. And also keep on educating on insurance jargon. There's so much of jargon and terminology to make informed decisions. Take a decision based on data, facts, and logics, as they say, isn't it? Research and compare different insurance providers. So keep on, doing research and research and research. And customer service is important. What kind of customer service they have and what is their claim settlement processes. So very important. So you can also go for long-term care insurance. So aging is a part, healthcare will be costly as we grow older. So you have to consider that. Purchase disability insurance. So in case of an accident or illness, which prevents you from working. So this disability insurance will help you guide through those tough moments. And if you're self-employed, many of us have research insurance options for business owners. And, many companies and employers, they have insurance plans sponsored by them and like group health insurance, disability, whatever it is. You can join them, you can take advantage. And you can also consider umbrella insurance to provide additional liability coverage beyond traditional policies. Maintain a good credit score again. It's a very important factor. Always remember, a good credit score helps you in many different areas of personal finance management. And educate yourself on the insurance coverage available for specific profession or industry. So they are profession-based, industry-based. Look for them, find out if they are suitable for you. And you should also consider life insurance, term life insurance for affordable coverage. That is, which meets your specific needs and timeline. Research and understand the claim processes so that you are able to have a smooth experience when claiming. Keep an inventory of your assets to accurately assess insurance coverage needs. So always you need to know what things you have, what can be covered or which is not. Consider an adjustable life insurance policy that allows flexibility in premium payments. So it is important that the coverage, insurance coverage is consistent. There is no gaps. especially for life insurance policies. Some people tend to forget, and there is a gap for renew or something, then they have issues, isn't it? Evaluate the need for extended warranties and consider their cost effectiveness. Seek professional advice from insurance brokers. Always good. Now, when you don't know, it's always better to know. As I keep telling, they are good people and right people, isn't it? Right people are those who know the subject in which you're talking about, and those who are experienced in that area, especially in the field of insurance, as we are talking about insurance. So the advisors are the right people, isn't it? And it is a vital component. Please remember always, insurance is very important for safeguarding your future. Unlocking the secret of mortgages. It helps individuals achieve their dreams of owning a home. So look at the case study. There was Sarah, a young professional, and to buy a first home, she had just graduated, secured a stable job, and also had saved diligently for a down payment. So many options are available. She was struggling to select the right one. So what do you do? So I understand my financial capacity. Very important. So before I go into the market, I assess my financial health, my income, my expenses, what is my credit score. Self-assessment is a very important part. Determine your affordability and qualify for better loan terms. And obviously, you have to shop for the best rates, isn't it? Do not settle for the first mortgage offer you come across. You should always take time, analyze, compare rates from multiple lenders to find the best deal that fits your budget. And you should also consider fixed versus adjustable rates. So you should always evaluate the pros and cons. Fixed rate provides stability, whereas adjustable rate can offer lower initial rates, but the risks are also very high. Read the fine print, very important. Many of the things are there. Thoroughly review the terms and conditions of your mortgage agreement. So you can find out what is the payment structure, interest rates, penalties, and any potential hidden fees. There is another case, Mark and Lisa. They were put into a lot of financial pressure because they didn't have proper planning and knowledge. And they were also not aware of the significant financial opportunities within their mortgage. Refinancing for lower rates. So refinancing their mortgage offered the potential to lower their monthly payments, isn't it? Because it offers lower interest rates. Utilize home equity, and they were able to tap line of credit, and they had built in their home to fund expenses such as education, home renovations, debt consolidation. That helps you. Accelerate mortgage payments, and so they started paying bi-weekly. So they were able to reduce the term of their mortgage and also save thousands of dollars in interest payments. They were able to save and leverage mortgage tax benefits. So there are tax deductions available on mortgage interest payments, and it also reduces overall tax liability. And also you can save for a substantial down payment. So when you put a larger down payment, it will help you secure better loans, isn't it? And also reduces the overall cost of your mortgage. And an emergency fund is always important. Establishing an emergency fund is very important, and maintaining a rain day, as they call it, rain day fund, will help you protect yourself, will help protect yourself from unexpected financial setbacks and ensure you can continue making mortgage payments. Isn't it very important? Unforeseen expenses, unexpected expenses. And you can also go for shorter loan terms. Choosing a shorter term might result in higher payments monthly, but it is also a quicker path, isn't it, to mortgage-free home ownership. Credit score is very important. It gets you lower interest rates, saves money. Over borrowing. Many people tend to over borrow beyond their capacity, then get into bigger problems. So you should always consider the long-term affordability of your mortgage payment to prevent becoming overwhelmed by debt. Be mindful of additional costs. Obviously, there's some additional costs you should know. Property taxes will be there, insurance, maintenance. So when you are planning a budget, it's not just buying a house or something, isn't it? It's also what are the expenses which will be occurred, which you will have to do over a period of time. That is, you will have to pay for taxes, you will have to pay for insurance. Professional advice, very, very important. The right people. Being proactive. That's what I said in the beginning. We need to be proactive, not reactive. So you can always negotiate with lenders for better terms and rates and can save thousands of dollars, isn't it? Avoid unnecessary refinance. So refinancing should be approached strategically. Suppose you find out the interest rates have gone down, or there are specific financial goals which might give you better return. So you have to plan accordingly. So review, periodically review the terms and make adjustments if necessary. You can also consider, suppose you got a bigger house space available, renting out a portion of your house or home. So you should also be aware of foreclosure risks. So understand the consequences of defaulting on payments and avoid foreclosure. So insurance is very important. Mortgage insurance, explore the options carefully. Bi-weekly payments helps you save interest on you will have better savings over a period of time. Technology, make use of technology. You can use tools, calculator, apps for managing and tracking your mortgage payments, isn't it? Make extra payments wherever possible. So you get some extra money, don't know what to do. Always can reduce your loans, isn't it? Keep educating yourself, keep updating yourself, isn't it? Stay informed. Changes, trends, opportunities. Make the most, isn't it, of your mortgage. So, secrets of mortgages unlocking is important. Who wants to navigate the world of home ownership successfully? It's very important to understand. And the tips and strategies shared with you will help you. Knowledge and strategy. Understanding the art of investments hold the key to financial success. David, a young professional, started investing $1,000 annually into a retirement account at the age of 25. He started investing, and the compounded returns on his investments helped him accumulate significant wealth. And that is the power of starting early. Use the power of compounding for financial growth. So start investing as early as possible to take advantage of compounding, and regularly contribute to retirement accounts to maximize potential returns. Research and diversify investments to lower risks. Always stay updated on market trends and adjust investments. And here again, there is Sarah, a seasoned investor, and there was a volatile market during a financial crisis. It happens ups and downs. So there will be growth, and sometimes there will be slowing down of markets, isn't it? So she did not panic. So she did a lot of research. She was following or identified undervalued stocks. Certain stocks, if you look at the markets, they will be undervalued. More potential will be there. So she analyzed their potential and made strategic investments. It's very important that you keep cool, keep calm, and also have an analytical mindset, especially when the market is in downturn. So market volatility is also an opportunity, but you have to be thorough with your research, isn't it? So always have diversified portfolios. It reduces the impact of market fluctuations. Never let emotions dictate your investment choices. Being rational and patient will help you get better returns. So some tips. So have clear investment goals, have a plan, also have an emergency fund. So you should clearly understand the different types of investments. They are stocks, bonds, mutual funds. And also they have their risks and rewards, isn't it? And today we live in a globalized environment. There are trends, global trends, which also makes a lot of impact on your investments. So stay informed. So there are also tax efficient investment strategies, and that helps you maximize your returns on your investment. Low cost index funds are also a way for investing. Review your investment portfolios, and also evaluate. Take risks, but calculated. And also have a long-term perspective. Don't have that knee-jerk reaction. The market goes, you start buying, comes down, start selling. Don't do all that. Long-term perspective helps. So also you have got your values, your beliefs. So align your investments. Keep on educating yourself. Leverage the power of dollar cost averaging for regular investment contributions. You should also understand the concept of risk tolerance and invest according to personal comfort levels. Some people can take bigger risks, some people cannot afford, isn't it? So you have to understand that also. Diversify across asset classes, sectors, and geographies for risk mitigation. Real estate is also an area. So evaluating and optimizing investment costs. So how you do that? By minimizing fees and expenses. Also, you can keep a money for some philanthropy if you feel, or social investments. Seek professional advice when navigating complex investment options. Derivatives are there, alternative instruments. So many instruments are there, isn't it? But if you're not updated or not aware, ask for professional advice. Never get into those quick rich schemes or somebody offers you unsustainable investment promises, isn't it? Don't go for your needs. Don't go for greed, as they say. Learn from investment mistakes and adjust strategies accordingly. Made a mistake? Fine, no problem. Learn, move on. So you should also have proper asset allocation. Stay disciplined, very important. And don't time the market. Network and learn from successful investors through mentorships or investment clubs. Stay resilient, patient, and be committed. Long-term investment journey. I hope the strategies and tips shared will empower in your pursuit of financial freedom. A retirement plan, journey to financial freedom, post retirement needs, isn't it? Very important. You have to plan. So, if you're having a job, if you're going to retire, what do you do for your finances? Keep yourself financially free. It's a very important aspect of personal finance so that you have a stress free future. So, Sarah again, she is a professional. She started her retirement planning early. All the plans, various options. She did a lot of research. She had a diversified portfolio and she was able to secure a financial stability. Regularly contributing a percentage of her income to retirement funds also allowed her savings to grow. John Slade, but strategic start. So he had a delayed start and didn't know how to start. And so we took help and had a realistic budget and also made some adjustments to his lifestyle. And he went for a very, very aggressive savings plan. And he started increasing his contributions to retirement funds. And also by making smart investment choices, he was able to maximize his returns within a shorter time frame. So it's there. Early, okay, fine. If you're a bit late also, you can catch up, isn't it? By making smart investment choices. So they did early research and they keep themselves educating on investment options and had a diversified portfolio, mitigated risks, and optimized returns. So regular contributions and disciplined, realistic expectations, necessary lifestyle adjustments. Very important for John's late start. So some tips: start planning for retirement as early as possible. Educate yourself. Diversify your investment portfolio. Take full advantage of employer-sponsored retirement plans. You can consider opening an individual retirement account. Regularly reassess and review. You can increase the percentage of income allocated to retirement funds and seek professional advice. Understand the tax implications. You should also factor in inflation and potential health care costs when you are planning your retirement needs. Create an emergency fund. Avoid unnecessary debts and prioritize paying off high interest loans. Consider downsizing or relocating to a more affordable area. Upgrade your skills to remain employable. Stay informed about changes in retirement policies. Rebalance regularly your investment portfolio. You can also leverage catch-up contributions. Explore annuities. Consider long-term care insurance. Collaborate, plan with your partner or spouse. Reduce unnecessary expenses. Continuously educate yourself. Annually review and assess your retirement plan. Embrace flexibility and adaptability. Crafting a retirement plan is a very important milestone on the path to financial freedom. Demystifying taxes. Keep a detailed record of all income sources, expenses, and deductions. You should also understand the different types of tax deductions available. There will be medical expenses, education, home office deductions, whatever it is. Understand the different types. Take advantages of tax credits. Consider tax efficient investment strategies. You can also explore tax deferred investment options. You can also take the help of a tax professional, or softwares are also available to understand, navigate complex tax laws. You can use tax advantage accounts for higher education expenses. Also be aware of state-specific tax laws. Keep track of potential tax rule changes. And also explore the possibility of tax loss harvesting to offset capital gains. You should also understand the impact of filing status option and also optimize your tax deductions by timing expenses. You can also do a lot of research on potential tax credits for children and also capitalize on tax advantaged saving schemes for healthcare expenses. Evaluate the benefits of a home office deduction. Consider the impact of state income tax rates. You can also explore tax efficient strategies for gifting assets. Also, tax implications when receiving unexpected windfalls or large bonuses. You should keep track of the tax implications. Do a lot of research on tax incentives and also consider the benefits of tax-free municipal bond investments for savings. Okay. Electronic filing methods are available and maximize retirement account contributions. And it also helps lower taxable income. Be careful, cautious, potential tax scams, and also maintain secure handling of personal information. Consult with a tax plan or advisor. Continuously educate yourself on tax laws. Estate planning, securing your legacy. So start planning early to maximize the benefits. Consult a qualified estate planning attorney or financial advisor. Have a detailed inventory of assets. Review and update regularly. Consider the benefits of revocable and irrevocable trusts for privacy, asset protection, and avoiding probate. Understand the implications of state-specific laws. Have a contingency plan. Communicate openly with family members about estate planning. Evaluate the potential impact of estate taxes on wealth transfer. Carefully select beneficiaries for retirement accounts, life insurance policies, and other assets. Safeguard digital assets. Establish a durable power of attorney. Consider the benefits of charitable giving in estate planning. Review and update life insurance policies. Create a comprehensive healthcare directive. Utilize strategies such as gifting and qualified personal residence trust to manage estate tax thresholds effectively. Educate heirs. Consider the benefits of family limited partnerships. Understand the potential impact of long-term care costs. Research the implications of international assets on estate planning and consult professionals. Consider the benefits of lifetime gifts. Be aware of the potential pitfalls of joint ownership arrangements. Develop a comprehensive plan for philanthropic goals. Also utilize professional appraisals to determine accurate asset values. Open communication and transparency within the family is important. Financial IQ. Automate your savings. Track your personal expenses. Explore side hustles or additional income sources. Invest in appreciating assets. Build an emergency fund. Diversify your investment portfolio. Maximize tax advantages. Prioritize debt repayment. Seek financial literacy resources and education. Consider balance transfers and debt consolidation. Budget your expenses strategically. Review regularly. Your insurance coverage. Have short-term, long-term financial goals. Update continuously your financial plan. Take advantage of employer-sponsored retirement plans. Seek professional advice from financial planners. Explore investment opportunities that match with your risk tolerance and goals. Embrace frugality without compromising quality. Practice mindful spending. Avoid impulsive purchases. Prioritize savings for major life events. Always keep an eye on credit score. Review regularly your performance, investment performance. Consider engaging in peer-to-peer lending or crowdfunding. Educate yourself on estate planning options. Expand your financial network continuously. Seek mentorship and collaboration opportunities. That is, increasing your financial IQ is a transformative journey, and it involves commitment, discipline, and continual learning. Embracing technology for financial success. Start by understanding your financial goals and needs. Research, choose apps and platforms that matches with your objectives. Use budgeting apps for tracking income and expenses. Take advantage of automated saving apps to grow your savings effortlessly. Explore investment apps and platforms for personalized investment opportunities. Use robo-advisors to get expert advice. Diversify your investments. Stay updated with financial news, trends. Make use of debt management apps and also leverage social media platforms for financial education and networking. Set up automatic bill payment to avoid late fees, and use technology to compare prices and find the best deals while shopping. Explore cashback apps. Consider online crowdfunding platforms for funding personal projects. Use personal finance calculators to analyze loan terms and interest rates. Tap into online learning platforms for free or affordable financial courses. Keep your financial data safe by utilizing secure password management apps, and set financial goals and track your progress with goal-oriented apps. Digital wallets are available. Utilize them. Payment apps, which are convenient and easy to use. And you can also use, online tax filing platforms. Protect yourself against fraud and identity theft. It's very important. And also you can engage with online financial communities to get tips and experiences. So you can make use of technology-driven financial advices for personalized guidance. You can also follow influential finance bloggers. So continuously explore and adapt to new financial technologies for ongoing successes. It's very important. Technology today is part of life, isn't it? So you need to be comfortable with technology. So debt is there, and mastering debt is very important, and it's very important for financial freedom, for a debt-free life. So, what are the tips here? Have a budget, realistic, stick to it, prioritize debt repayment, negotiate with creditors, try to get lower interest rates or extended repayment terms. Also, cut down on unnecessary expenses and practice frugality. So, go for side hustles or part-time jobs, increase revenue or income. And many of the time, we do a lot of impulse buying, isn't it? We should try to avoid impulse buying and practice mindful spending. So consider debt consolidation or balance transfer options. Seeking professional advice is important. Track expenses, where the money is going, so where I can improve. Set measurable goals and timelines. So very important. Have proper goals. Automate debt payments. Suppose you are having unnecessary or unused items, you can plan to sell them, get some extra cash. So, many people have this habit of using credit cards even for day-to-day purchases. So I can avoid that. Use cash and take advantage of balance transfer offers if you're coming across any of them. So unnecessary dining out and try to prepare meals at home. Many people, just for that, they go out, spend a more. So probably you can work on that. Seek financial support from friends and family wherever necessary. Stay motivated. I think that's very important. And you should always pay off high interest debt first. Negotiate repayment plans with creditors and also try to avoid taking new debt. Explore all the debt consolidation loans to simplify repayment. Utilize online to use technology. Investigate potential opportunities for refinancing. If you have got existing loans, investigate potential opportunities for refinancing. Join groups, online communities for motivation and accountability. And also celebrate milestones. Reward yourself within reason, that is, as you progress towards debt-free life. Investing in uncertain times, market volatility, and how to navigate that. So conduct a lot of research on potential investments. Have a emergency fund. Embrace diversification across industries, asset classes, and geographic locations. And also maintain a long-term investment horizon. Regularly review and rebalance your investment portfolio. And also invest in index funds or ETFs for broad market exposure. Avoid timing the market and focus on consistent contributions. Consider dollar cost averaging as a systematic investment method. Stay informed about market trends, economic indicators, and global events, and also seek assistance from financial advisors or investment professionals when necessary. You can also take advantage of tax-efficient investment vehicles. Keep emotions in check and avoid making impulsive investment decisions based on fear or panic. Monitor interest rates and inflation to adjust your investment strategy accordingly. Analyze historical market downturns to understand potential investment opportunities. Utilize stop loss orders you can utilize stop loss orders to limit potential losses. And you can also take advantage of dividend reinvestment plans. Assess your risk tolerance and invest accordingly to balance growth and stability. So diversify your income sources and explore alternative investments for a well-rounded portfolio. You should also keep, or rather, consider the impact of geopolitical events on specific industries and sectors. Assess your investment goals and the time horizon to determine the appropriate asset allocation. Utilize risk management tools. Monitor your investments regularly. Seek valuable insights from industry experts, financial news outlets, reputable sources, and also network with other investors to gain diverse perspectives and insights. Maintain a positive mindset and view market volatility as an opportunity for growth and learning. Very important for financial gain is the art of negotiation, mastering the skills to thrive. Always do research, get data, relevant data before any negotiation. And also have clear goals, prioritize them so that you can maximize the outcomes. Understand the other party's motivation, needs, and limitations. That is SWOT analysis, strengths, weaknesses, opportunities, threats. Listening skills are very important. Develop effective listening skills. Listen carefully what the other person has to say. Practice active questioning. And always maintain composure. And you should control your emotions during negotiations. Master the art of compromise and find win-win solutions. That helps both. Have confidence and be assertive without being aggressive. What is assertiveness? It is saying yes when you want to say yes, no when you want to say no, but you are also being polite and diplomatic. So have rapport, have a positive relationship, highlight and leverage the unique qualities or circumstances that provided an advantage. You should always identify and emphasize the value you bring to the table. And also use objective criteria to support arguments and make them more persuasive. You should be adaptable and open to alternative solutions. Anticipate potential objections and prepare counter arguments. Stay patient and persevere, even during challenging phases. Have effective negotiation tactics. Non-verbal communication can be used to convey confidence and credibility. And also have a problem-solving mindset. Avoid making overly aggressive offers or demands that may put negotiations at risk. Also leverage time constraints to influence negotiations in your favor. Silence is an important tool. You can embrace silence. So ethics and also fair practices are important. Seek feedback and learn from each negotiation experience, good or bad. Reflect on successful negotiations. Identify areas for improvement. Refine your skills. Very important. There are different types of negotiators. There are skills required. There are different steps involved. Conflict resolutions and strategies which the other person uses. So we have to be aware. Keep your negotiation skills updated regularly. Credit scores and reports. So paying bills on times will establish a positive payment history. And also having credit utilization ratio should be kept low. So avoid excessive credit card debt and also regularly check credit reports for errors. So disputing any incorrect information should be done and also limit the number of new credit applications. Too many applications gives a negative image. Diversify credit by making or having a mix of credit cards and loans. And also avoid closing old credit accounts. Should be closed. Seeking professional credit counseling if needed. And also setting up automatic payments to ensure timely bill payments. Budgeting and tracking expenses is very important. Negotiating with creditors for better rates. Consider secured credit cards for credit rebuilding purposes, and also being cautious of credit repair scams and fraudulent companies. Stay away from them. Paying attention to credit inquiries and being selective with new credit applications. And you should also know, you should understand the impact of bankruptcy or foreclosures on credit scores. Maintaining a stable employment history to show financial stability. That is also equally important. Seeking advice from financial advisors, credit experts. Paying off outstanding debts strategically. And especially we start with high interest ones. And being aware of the potential impact of co-signing for someone else's debts. You should be careful. Seeking pre-approval for credit before major purchases to avoid multiple inquiries. And also utilizing available credit monitoring services or apps. Maintaining low credit balances and avoiding maxing out credit cards. Educating oneself on credit rights and consumer protection laws. And also practicing regular financial checkups and monitoring credit progress. Retiring early, that is the pathway to financial independence, isn't it? So some tips for you. Set clear financial goals, have a clear roadmap towards early retirement. Track and analyze your expenses to identify areas for potential saving. Maximizing savings by cutting unwanted, unnecessary expenditures. Can also create an emergency fund. Automate your savings and investment contributions to ensure consistent contributions, isn't it? And also keep on educating yourself about various options available, seek professional advice, capitalize on tax efficient investment vehicles. Retirement funds are there, tax free savings accounts are there. And also evaluate the viability of rental property investments, isn't it? For generating passive income. Consider pursuing part time or freelance work to boost income while gradually reducing traditional employment, isn't it? And prioritize debt repayment to minimize financial burdens during early retirement. Strategically allocate funds towards assets with potential long term growth, and also continuously reassess and adjust your financial plans as economic conditions and personal circumstances evolve. Isn't it very important? You can have delayed gratification, practice that, and also resist the urge to splurge on unnecessary purchases, isn't it? And also try to build a strong network of like-minded individuals, who can provide support and guide you on your journey to financial independence. So regularly review, update your retirement savings and investment strategies. So investing in your health and well-being is also important. It will help minimize healthcare costs during retirement. Explore alternative ways to generate income such as online businesses or freelancing in your area of expertise. Very, very important. And also consider if it is there, having your downsizing your living arrangements. So you can also reduce housing expenses, philanthropy, charitable giving into your financial plan, and also prioritize ongoing education and upskilling to enhance career prospects. So better career prospects, better financial growth will lead to better retirement planning. And also plan for a fulfilling retirement, not just, by some hobbies you might have, you'll be having some activities to maintain them. And your mental and emotional well-being is also equally important. I need to achieve a mortgage-free status before early retirement. and growing wealth through passive income streams. How do you grow wealth? So identify your passions and talents, and then you can find out if there is any passive income stream can be generated. Conduct thorough research and due diligence before investing. So very important. Start small and gradually scale up, isn't it? Diversify your passive income streams so that low risks. Stay updated on market trends, adapt your strategies accordingly, and also, simultaneously develop a strong network of mentors and peers for guidance and support. Automate processes, leverage technology to maximize efficiency, and also continuously keep on learning and invest in self-improvement to enhance your skill sets. Have an emergency fund, very important to handle unexpected challenges. Monitor and evaluate the performance of your passive income streams. Regularly take calculated risks and be open to exploring new opportunities, isn't it? Follow a disciplined savings and investment plan to allocate funds, leverage tax advantages, seek professional advice, and the objective being is to optimize financial gains. And also consider investing in dividend paying stocks for consistent payment or passive income. Important is can also create digital assets, ebooks, online courses to generate passive income. Affiliate marketing programs are available where you earn commissions and purchase income generating assets. Engage in peer-to-peer lending platforms, crowdfunding opportunities. You can invest in them. Monetize your hobbies. Purchase rental properties. Establish blogs, website. It can generate revenue. Potential of cryptocurrency investments, isn't it? That's interesting. And embrace the sharing economy by renting out your property or offering ride sharing services. And it requires a long-term mindset, isn't it? And consistently reinvest a portion of your passive income for further growth. Very, very important. That is how we do this. Sustainable and ethical investing. So you can always do research, choose companies that align with your values and ethical considerations. So diversify your portfolio, manage risk. You can also utilize specialized sustainable investment platforms which are available, and you can also consult the advisors, isn't it, for guidance, which are the best companies, how should I invest, where should I invest. Also, stay informed about the latest trends and developments. So there's a lot of information available. Keep yourself updated. Identify companies, which have got strong CSR, that is corporate social responsibility initiatives. They are good companies to invest. And also focus on industries poised for sustainable growth. Renewable energy is excellent area. And engage in shareholder advocacy by actively participating in company meetings. So go and participate there in company meetings. Investing in green bonds is an interesting thing to do. Analyze company supply chains for ethical sourcing and what are their labor practices, how they are sourcing, and also support community development by investing in local businesses. That's a good way to begin with. And you can also consider microfinance investment opportunities to empower unprivileged, underprivileged individuals, isn't it? And also you can evaluate the long-term potential of startups which are focusing on sustainability, social impact. Assess the management team's commitment. So what is the level of commitment? Who are the people? What is their background? And you can also use the UN Sustainable Development Goals as a framework to understand and prioritize investments. Always apply a very rigorous investment screening process. This is an interesting area. It's an emerging area. And so that, whatever you're doing, it also has an alignment with your personal values. This is very important. Look for companies implementing innovative approaches. So that's an interesting thing to do, which are, their social challenges, environmental challenges. Look for companies which are investing or doing innovative things in that. Consider environmental impacts metrics, carbon footprint, water usage. These are wonderful things. There are certain metrics which are easily measurable, isn't it? Assess the social impact of investments by analyzing employment practices, diversities, what are they doing, and also the governance structure to identify companies with transparent and accountable practices. Monitor and evaluate the impact of your investments, financial, social. Engage with other sustainable and ethical investors through communities and forums. This is very important. Allocate capital towards renewable energy infrastructure projects. Consider investing in impact funds or exchange traded funds. Focus on sustainability and also collaborate with financial institutions offering sustainable banking and investment solutions. Continuously educate yourself on sustainable and ethical investing practices, which will lead to better decision making. That's very, very important, isn't it? So a lot of things are happening. There are climatic changes happening. And also there is a meeting of personal finances with the climate change happening. Going green, saving green. Interesting concepts, emerging concepts. So you can do a home energy audit. So where are the areas of improvement? You can have better energy efficiency products, systems, helps you save money. And also invest in energy efficient appliances and electronics. You can also have solar panels, generate your own clean energy. That's an interesting thing to do. And also use, wherever possible, energy saving light bulbs and turn off lights. Again, when not in use. So insulate your home properly so that heating and cooling costs can be reduced. Also offer low flow fixtures, bathrooms and kitchen to conserve water. Very important, water conservation, electricity conservation. You can also have a compost bin to reduce waste and produce nutrient-rich soil for gardening. Very, very important. You can have, experiment with different things. You can also purchase eco-friendly cleaning products so that no harmful chemicals are released. Use reusable shopping bags. Avoid plastics. So, reusable water bottles, shopping bags. Yes, they can certainly make a change. Implement a recycling system that includes paper, plastic, glasses, organic waste. And also reduce food waste by planning meals, freezing leftovers, composting. And also invest in a programmable thermostat to regulate, especially in cold zones, So regulate your home's temperature. Practice eco-friendly landscaping by choosing native plants and refrain from overwatering. And also, today eco-friendly transportation options are available. You can use electric or hybrid vehicles, bikes, public transportation. You should consider them. Join a carpool or ride-sharing program so we can minimize individual carbon emissions. Work from home, remotely, wherever possible, whenever possible, to reduce commuting time and expenses. Switch to electronic billing, opt for paperless options. Yes, that's interesting to do. And also, you can shop for second-hand items or utilize online platforms for buying and selling used goods. Support local farmers and businesses that prioritize sustainability. And again, food habits. If you want, you can change. Install rainwater harvesting. It's an interesting thing to do, important thing to do. So, and we can use that for outdoor watering. And also invest in sustainable investment options that prioritize environmental responsibility. Use smart power strips to avoid standby power consumption. Participate in community cleanup initiatives to contribute to a cleaner environment. Very important things to do. Above all, educate yourself and others about climate change, its impact, and its impact on personal finances, promoting greater awareness, sustainable choices, and welcome to the digital economy. How to navigate cryptocurrencies, which are being in news, isn't it? So everything starts with having clear goals, prioritize them. Also have a monthly budget, track your expenses, have clear investment goals, and use demo accounts and simulations to practice. Isn't it? Trading strategies, buying and selling, use demo accounts, understand them, and also understand the concept of market cycles to make informed marketing. So going up and down is a part of market, isn't it? And you can also implement dollar cost averaging, And also keep on assessing, rebalance your cryptocurrency holdings. You can use stop loss orders to protect your investments. And also consider holding a portion of your portfolio in stable coins for stability. But above all, be cautious of scams and fraudulent companies. Tax obligations, and very important, you should carefully go through different countries and different taxes. So be aware of the tax obligations related to cryptocurrency investments. So keep digital wallet secure. So there have been losses, there have been thefts. So you have to keep your digital wallet secure. Network and join communities so that, with like-minded, so you get updated. Understand the concept of mining before starting a mining operation in crypto coins. Explore alternative mining methods to reduce energy consumption if you are into the production of bitcoins, and monitor electricity cost when mining cryptocurrencies. You can also leverage hardware wallets for enhanced security, isn't it, of digital assets. Have clear exit strategies and profit targets. Very important when trading in cryptocurrencies. Consider the long-term investment potential of select cryptocurrencies. So it's good. Avoid emotional decisions. Always remain disciplined. Use data, logic, and reasoning. Always stay patient during market downturns and avoid panic selling. It's better to avoid panic selling. And you should also understand there is correlation between traditional markets and cryptocurrencies. Educate yourself basic technical analysis. So it will help you identify the trends and patterns. Continuously educate yourself. And above all, experiment and learn from mistakes to refine your strategies and evolve as a investor. So embracing financial freedom, isn't it? And building your own path to prosperity is an important step to take. So have clear financial goals, prioritize them. That's the first step, isn't it? Second step is create a monthly budget. Track your expenses. Don't go for unnecessary expenses. And saving money should be an attitude, as they say. Build an emergency fund. They are very important. There will be unexpected financial setbacks, demands. Educate yourself about personal finance. See, there are a lot of books, podcasts, online resources. Keep on educating yourself, update yourself. Very, very important. Be proactive. Develop healthy financial habits, paying bills on time, avoiding impulse purchases, refinancing high interest debt. So we can also save some interest payments, use it for better purposes. Contributions if you have got some retirement plan or something of your employer. Save more. Start investing early. That's the best step. I think we have to remember. The earlier you start, you will have better returns because of the compounding returns, isn't it? And also diversify. Don't put all your eggs in one basket. Diversify your investment portfolio. Minimize your risk. Keep track of your credit score. It's very, very important and take steps to improve. So whatever is your credit score, that today your credit score decides the kind of offers, the kind of payment terms, the interest rates, isn't it? And your credibility when you go for a loan. It's very important today. So your credit score plays an important role in your financial management. Automate bill payments wherever it is possible. Don't pay them on late. Avoid late interest charges. Seek professional advice. There's no harm. If you don't know, no problem. But you have to go and ask the right people, isn't it? Those are the professional financial advisors, whoever they are, wherever they are. Approach them with an open mind. Teach your children about financial literacy. Very, very important. And prioritize saving for major expenses which are likely to come, and having multiple sources of income is very important. So try to have as many multiple sources if possible, and avoid excessive use of credit cards. So credit cards should be useful, really, in case of emergencies for important. But for each and everything, it can be avoided, and outstanding balances should be taken care. If you are going for insurance, look for the best rates, isn't it? You have to spend some time and consolidate debts to simplify repayment and potentially reduce cost.
Regularly review your financial plan and adapt it, isn't it? Negotiate lower interest rates with lenders when possible, and taking advantage of taxing strategies such as contributing to retirement accounts or deducting eligible expenses all play a role. Build a network of like minded individuals, set aside funds for self improvement, personal development. And above all, life is also a celebration, isn't it? Celebrate milestones, reward yourself. Remember, goals are important: short term, medium term, long term. Then, based on different parameters, career goals, work goals, personal goals, life goals, family goals, monetary goals, material goals, health goals. There are so many parameters. So the goals at the end should also be extending your capabilities and rewarding, isn't it? And having a good financial management plan for personal finance management plan is very important because money is important for life. But again, we can avoid excessive obsession. Some people are excessively obsessed with money. That is also may not help. And for proper work-life balance, having a proper personal finance management system is very, very important. I wish you that you have a plan. So it also requires determination, discipline, and solid understanding of personal finance. So we have shared with you a lot of tips on different areas of personal finance management. So by implementing these unique tips and strategies, anyone can take a step towards financial freedom and be and have a prosperous future.